September 21st, 2025. Bitcoin had its biggest leverage flush out of the year. Over 1.5 billion longs liquidated, and now the market is on edge. Ethereum, Solana are bleeding. Poly markets are betting a 60% odds that Bitcoin drops below 100,000. And option traders are hedging like we are into another tariff crash. But here's the twist. Spot Bitcoin ETFs now hold over 150 billion, and history says Q4 could flip from fear to fireworks. So, is this another run, a setup for another run up, or is this the start of something darker? Let's break it all down. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in crypto and Bitcoin action. If you like what you see, give us a like. Make sure you hit subscribe if you haven't already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day with Crypto Maniacs. All right, let's break this all down for you. Okay, so Friday, we were waiting on the August PCE inflation report that dropped. And I'm going to take you over to the numbers right here. And we could see that it's paving, according to Barron's, we're looking at paving the way for further rate cuts right now. So if we look at this, core year on year up 2.9%, same as July. All right. Basically, these numbers came in as expected. Core month on month up 0.2, softer than July's 0.3. Headline year on year plus 2.7, slightly hotter. But the headline is that month on month 0.3, again, slightly hotter. So stocks ticked higher on this news, and rate cut odds for October improved. But what the heck happened in crypto? It didn't. It kept sliding as deleveraging dominated this week. So we got to talk about that. There's something going on here, and we got to be prepared for it. So the good, the bad, and the ugly. So let's go on over to our do not close below chart, one of our famous little charts that we posted on July 19th, 2025. All right, so we got some black hats out there. Okay, it's, when we're talking about black hats, we're looking at Binance and a couple of other manipulators. So we just have to be a little bit cautious of what's occurring there. Now, we see them taking stablecoin. That could be for two different reasons. They could be actually looking to do the old dump and then pump. So actually could be pushing this coin down or all crypto down in order to actually get you to sell your bags and scoop everything at lower prices. That's one scenario. Another scenario is because we could be in for some heavy duty volatility, which is absolutely the case right now. So as it stands right now, if we look at this chart, we said 115,007 was a line in the sand when we made the top at 124.5. So as it stands right now, and I said that the 115.7 really isn't going to be respected until we got over 118.3, if you recall in previous video. And that was just basically just a measured move calculation that I do in marketplaces that basically tell me when there's a potential reversal from downward pressure to upward pressure. Now, is it right 100% of the time? Absolutely not. But it is right about 73 to 76% of the time. It is correct. So it's pretty good. It's a pretty good indicator for me to be able to take positions off of. Now, I developed this in the foreign exchange market, because I've been trading FOREX for over, I don't know, 30 years or so. And I recently got involved in crypto. Now, all technical analysis is the same. Now, you just got to figure out, I use an average true range, ATR, to figure this out. So, if I look at Bitcoin, if I look at the delta of Bitcoin, normal delta of Bitcoin is about $3,000. So if we can get, a retrace upward or downward, actually, if you get a rally upward of 3, or you get a retrace downward below 3, it's actually signaling short-term pressure for selling, and short-term actually buying pressure for upside. So that's basically where it comes off of. So now, as stated, the sell-off started September 21st when over 1.5 billion in leveraged long positions were liquidated. A move that dragged on to other coins. I mean, you look at XRP, XRP's bleeding. I mean, it's 278, right? After rallying to 315, which I said there was resistance at. Not to pat myself on the back, but we did say it. Now look, it's Saturday, right? Let's chill out. Let's talk a little bit. You know what? If you have any questions, if you have any comments, please leave them. I read all of them. Yes, I do read. I do read the naysayers saying, "Tom, you might be wrong with this, and you may be having to offer a big mea culpa." Yeah, okay, and I will, but I'm going to guide you through what I said. I also said that short term, there was resistance at 114. And, if you were looking for sales, that was the place to sell. Don't believe me, go back and watch a video a couple of days ago. I do give short signals, and I'm going to basically be covering that right now. So as it stands right now, the 109 area that we're holding slightly above right now is a very, very important area. Now, if I take this recent low that we had, okay, right here, and I'm going to get into the 2-hour chart, right? But right now, if I take this recent low of let's say 109, and I add $3,000 delta to that, we got to get above 112. So right now, 112 is the resistance for Bitcoin. If it can clear 112 and close above it, say even on a 4-hour basis, that's basically a buy the dip scenario. Buy the dip back down towards 108. Looking for a break higher back to like 115. Okay, now it's going to be a slow draw. It's going to be a lot of chop, but we got to be prepared for it. Okay, so Bitcoin right now is trading above 109. It's down nearly 6% on the week and over 10% from its August all-time high of 124. So let's go on over to our 2-hour chart. And let's check out our 2-hour chart right here. We'll do some chart work right here. Okay. We fell out of the pitchfork. Now, I cannot really readjust this pitchfork. Actually, I can. I can readjust this pitchfork now because I have several bottoms over here that are basically going to be acting as support. So let's do that. Let's actually adjust our pitchfork so that we can come over and we can get new levels. All right, so here it stands right now. That's probably, is this low? It could be either a tie between, actually that's the lowest low we got right there. So we'll punch it right there. All right, so as it stands right now, this level of 109,380 was a very, very important point. Said if it broke, we could actually go down towards the 1071. It's held so far, which is good. We're getting a little bit slight retracement upward. So right now, as it stands, as I said, we got to get through 112. And I believe that's like right there. Okay, 111.7. I'm going to move this up because the market volatility has changed a little bit. I'm going to go up to 112.1. That's the level we got to get up over. So what I'm saying in this scenario is this: if you're a short-term trader, right now there is selling pressure. Okay, the market is in selling mode, but you can't sell here. All right, because you could get the retrace. So really, if you hadn't sold up in this level, up in this area, right, for the movement back down towards these lows, well, really what you got to do is you got to be patient. So what you have to do is you have to observe whether or not the marketplace can actually rally from here. Like this low right here, what was the low? We got 108, what, 3? 108.7, 111.7. So what you're looking for is the marketplace to come up. And if it's going to actually act as resistance, it will turn down and will not cross, and it will come back down. And then if it will tick the bottom out, then you know that you're going towards the all-time low, or not the all-time low, but the most recent low that we have at 107. Now, what's the other side of this? Well, the other side of this, I'm going to move this down a little bit because this is not right. So it's got to be like one. I mean, I'm telling you, the points are really important. I mean, oops, let's get rid of that thing here. Let me do this. Let me come over here and let me go towards this, bring this down, 111, what, 8, something like that. Because this was, the low that we had was 1086, so 111.6. And let's bring it down, 111, right there, that's close enough. So what we're saying is this: if you're trading basically Well, kind of like a Wyckoff style. Okay, like it's kind of like it's not really like a spring because really what you're looking for is you're looking for a break of resistance, then the retrace, right? So it's kind of like what the boys do, very very similar to what they do. That they're looking to buy supports. They use Fibonacci levels, which is fine. So you could do the same thing, but I trade a little bit differently. And how I look at it is, if we come off these lows and we get above this 111, say 6, what I would do now at that point, you could say, okay, what's the high? And then you could do a fib retrace back down to the low and look to scoop the 0.618, or 0.382 or point, you could do a few movements. But what you'd be looking for is the movement to come back down and then stabilize. And it has to stabilize above this ultimate low, okay, and then you look for a return back upward showing that, okay, the marketplace is now starting to catch a biddish tone to it. I hope I didn't go too far into the weeds with that, but if you have any questions, just leave them for me in the comments. I'll be happy to answer them for you. All right, so let me clean up the chart because Frank doesn't like, Merlin especially doesn't like doesn't like messy charts. But really, I'm just like a messy guy. So as it stands right now, actually, I'll do this later. As it stands right now, Bitcoin itself is we're not in a bearish tone yet. As I said, we got to break through 107, 100 to say, okay, we're going bearish. But we had a couple of scenarios that we had to work through. So since the sell-off of September 21st, when we got the 1.5 billion in leveraged longs wiped out, waves of liquidations dragged down the entire market from Ethereum to Solana. So, as I said earlier, we got poly markets betting that there's a 60% chance that Bitcoin is going to drop below 100,000 before year's end. Options skew is screaming defensive positions. I'm going to get into that in a second, okay? Because it's an important little indicator. And what we got to understand is that puts are pricing at their richest since the tariff crash earlier this year. So that means that big boys are actually using options as a defensive tactic. So in other words, they don't want to sell their coin, but yet they are buying puts on it. So if it does move down, those options will kick in and protect their positions. And I'm going to get into that in a second. So if we look at this scenario, okay, we had two scenarios that were working. Scenario 1, scenario 2. Right now, scenario 1 is playing out. We haven't fallen into scenario 2 yet. Scenario 1, the warning would be the break of 1071 would actually say that we're driving into scenario 2. So we know that there were sweeps on both sides. Now the big boys, the black hats, Binance and so, they're looking to push the marketplace lower. They're trying to get you to sell your bags. Telling you, hold tight. Get into our pro group. We'll guide you through it. Okay, we're seeing the different scenarios start up, and look, we have enough experience to understand, like, don't have knee-jerk reactions. Okay, we know when to hang tight. We know when to hold them. And we definitely know when to fold them, and we'll guide you through there. Okay, so scenario 1 is playing out right now. We got to get above 111.6. Okay, that's the line right now for Bitcoin to crawl back over, close above. So even on a 4-hour basis, it would be good. That would mean we could start to look by the dip down towards that 108.6 that we got. So that would be the scenario. So we know that Bitcoin swept both sides of this thing. We swept the upside. Congratulations to the bears. Perfect. Wyckoff sweep on the upside, up through the previous high, slightly higher, sell the previous high, movement down. Yes. Sweep again. Bullish retest in the works. Yes. Okay. So congratulations to the boys and gals that sold. Yes, they are winning the game right now. They are winning the battle, but are they going to win the war? That's I don't think so. I think that, but right now they're popping the champagne, and they got those lobster tails, with the tarragon butter sauce. They're all set. They're eating, saying, "Boys, we got you by the short hairs." However, if we break the 111.6, the bulls are going to be starting to battle back. All right, so we just got to be patient with it. All right, so Both sides were swept. Selling pressure is still on right now. The line in the sand is 1071. Break above 111, say 6, actually starts to show some strength coming back into Bitcoin. So Bitcoin really never hides its playbook, right? So it take you over to this chart. It never does, okay? In 2017, bottomed the green box and then exploded to 20K. I mean, think about that. 2017, the coin was only worth $3,000. Man. All right. Bottom in the green, exploded to 20K. Now, at 20K, everybody thought, oh, it's over. It's going to crash. It's going to go back down to zero. No, we're up at 109,000 right now. So we had the same naysayers back then. Okay. Right now, yes, there is some pressure on the marketplace. We cannot deny that. You got to trade what you see, right? I mean, I'm not blind, I'm not stupid. I've been around this game a long time. I understand what the market's trying to do. And yes, the bears right now are in slight control, but again, a break above 111.6, and the bulls are going to be starting to battle back. You can be short enough, write down the price and watch it. Okay, so right now, 2025 just tapped the same structure. Weak hands are going to start to panic. Always happens. Strong hands prepare for the vertical liftoff. You can't ignore it. Okay, let's check out fear and greed. Because fear and greed, yesterday was really, really strongly in fear. Let's check it all out. Where is my fear and greed indicator? It's right here. Fear and greed. Let's come over here. It's a little bit better than yesterday, which is good. It means maybe retail is actually starting to sharpen up a little bit. But right now it's still at 33. Yesterday, as you know, was like 28. So today's a little bit better. Now, as I was saying, when we talk about options, okay, the options indicator, the option skew indicator is a pretty good indicator, kind of just like IBIT shares. I turned you on to IBIT shares. I'm going to come on over and we're going to check out Bitcoin options, ETF expiry. Okay, now, the option skew, which measures how much more expensive bullish call options are on Bitcoin than bearish puts. That skew across maturities show prices at their richest since the tariff sell-off early this year, which indicates a complete defensive positioning by big boys. Now, what we're talking about, don't forget, Fidelity, BlackRock, Vanguard, okay, they have their funds. They have to protect themselves. They have to. They are net long Bitcoin, and they're selling Bitcoin off to their clients as an investment vehicle. First time it's ever happened. So when big boys have these type of positions, no matter what, they view options as an insurance policy. So what do I mean by that? Well, I mean that for a small amount of money, which is called premium, you could actually buy the right to sell, right? So if there is a heavy duty sell-off, those options will kick in and you'll make your money back as long as it's, you make more than what you have to pay in premium. So right now, the put options are very, very dear. Okay. So if you didn't get your put options earlier, now the trade-off isn't as great as it was, if you bought options out of the money options, say 3 months ago, and you positioned yourself 3 months ago. So right now, as it stands, the big boys are using options as insurance to protect the long positions right now. So if we look at this, and every ETF expiry is Bitcoin volatility, and that's for sure. Okay, so in March we had 13% into a 13% dump into a vertical 27% explosion. In June we had a 9% dump and then a rally that followed up 12. Right now, September, 7% so far, and we could go down as low as 13%. So we've been saying this all along, just not that we know that we could go down into that $97,500 old CME market gap that was sitting there. Now, if that happens, all heck is going to break loose. Okay, it's going to be wild because there are people that were that I'm not saying they're still short, but usually if the gap gets filled like that, then it's really going to be completely volatile. And then a break above 106 again will take us like way beyond, 115, 124,000. Okay. So, but here's why it matters. Crypto markets are struggling to stabilize after this route that we had where where on September 21st, they're having a hard time stabilizing. So, volatility is spreading to altcoins and even crypto stocks like MicroStrategy, Circle, Coinbase. They're all big. They're all down big on this week. Okay, median Bitcoin returns historically start strong early in the month and fade later, which fits the current pattern right now. It fits the pattern. But if we look at the playbook, the overall playbook of Bitcoin, I mean, we can't just deny this. Okay, the weighted moving average has been a very, very good indicator for Bitcoin. Weighted moving average of 14 is a bull market. Okay, we're still above it. Okay, dips are for buying. Now, below a WMA of 14, it's basically sell for survival, right? Ignore it and ignore this in your panic. The chart doesn't lie. Wealth is built by following. We're still above it. We're still in a hold. Okay, so monthly we're doing well. We're above the moving average of 14 months. Okay, now if we look at Bitcoin, that what we call the cheat sheet code. Okay, look, I'm not saying that we're not going to have volatility. What I'm saying is that I just went over that we could go down to the CME market cap, and I'm trying to make my thoughts clean. The best way to handle this is actually join our pro group. It costs nothing to do it, and we talk about this stuff, and we can help you out with it. But really, what I'm saying is that every single year it ends. The market ends. It ends the bleed and starts the fire. Okay, so if I want to come over and I want to look at September of 2023, all right, the marketplace cooled off and then we had an 80% rally. Okay, 2024, okay, we cooled off, then we had a 96% rally. 2025 is loading. Yes, we could get a cool off. We could actually get a cool off down to like 93,000. Yes. Okay, but history is loading. Sideways isn't the script. Liftoff is inevitable. Up to look, Bitcoin overall is going to go much higher. Now, my old treasurer used to say things like this. Since I was a short-term trader, I didn't really take any heed. But really, these words of wisdom are actually true right now. One time he came over to me. I was trading dollar mark at the time, actually, and he came over to me and he said, "Oh, look at the boons. Look at the boon market. The market is going to fall. To take a long dollar mark position and put it in a drawer, and 6 months later you're going to see how much higher it is." I didn't agree with that at all, and he was absolutely wrong. The mark actually rallied strongly, and if I would have taken his idea of putting it in the draw and forgetting about it, I would have woke up to a very, very bloody portfolio. But really, what I'm saying here is Bitcoin itself. It's a hodl, man. In the long run, it's going to be much higher. How much higher? Some people are saying 1 million. Now, I know that other people have poo-pooed that, say, "Tom, you're out of your mind." I actually thought it was mad too, okay? But really, is 200,000 in the cards, 300,000, 500,000? Yeah. But, this is a type of thing that, where you put it in the draw, as long as you're not over leveraged, you could put the coin in the draw and look 6 months later and it's going to be higher, okay? Or 8 months later, be higher. Be much higher than 100,000, 130, 150. Yeah. Okay. So, but there are other coins also that will benefit from this, and they're much less expensive. And there's something that you could get into. We like HBAR, we like AXL. We have a few that we always cover. So get into our group and check it out. All right. So as it stands right now, the fourth code, the cheat code is alive. We just have to be patient with it. Let's scoot on over to Ethereum, as I'm taking way too long in this. I'm getting too verbose today as a Saturday. We look at Ethereum itself. We've seen this, okay? 45 days of chop in June, then we had the movement upward, okay? Today we got 46 days, 47 days in September, and the fake out has happened. We're looking for the explosion to upward above 4,800 to take us to 6,000. It's not random noise. Ethereum turns fake outs into detonations every single time. So, where's Ethereum itself? Well, right now, Ethereum is trading at 4,000. What did we get down to in Ethereum? We get down to 3,000, 3,825. Now, for Ethereum, I have a $600 delta on that. All right. So, what I mean by $600 delta is that Ethereum's warning above 4,425. Is that this price? Look at that. That's Frank's medium price right there. 4,425. That point right there. The rally back over above this point will actually signal the same thing that I said would happen in Bitcoin. You would get a small retrace back down maybe 4,200. As long as it doesn't break down through this low, that would be the buy, and that would be the signal for the next pump. Amazing. Now, I didn't plan it, but it's pretty amazing. Frank and I, we have conversations, like he has a different way of trading than I do, but we were talking about a euro dollar sale just the other day, about 2 days ago, and I was short the euro dollar at 117.75, and he got short at 118.10. Now I had to take profit. Or I said in one of my YouTube videos, I said that because we traded we closed below 117.52. I saw the euro dollar actually trading down towards 116.30. He had the same exact point I had. Now I escaped Friday. I escaped at 116.70. Went down to 116.44. So very, very close to the point. But I tried to let it run. But okay, anyway. But what the point I'm trying to make is that we have very, very similar points, and we arrive at them in different ways. But it just goes to show you that if you have good technical analysis, a good technician is going to come up with the same points as another technician. Now, they might not be exactly the same, and we might not arrive at them at the same way. But man, it's unbelievable. It's unbelievable. So Ethereum is holding just above 4K. It dropped over 2.4% in the last 24 hours. And we know Ethereum's been getting hit hard, right? If we look at the chart itself, we know Ethereum has really been getting hit hard, but it's the same zone Legends bought before the last explosion. Now, I'm not a I don't profess that you should actually look to catch a falling, look to catch a market that's falling. Don't try to catch daggers. Okay? Wait for the market to stabilize and do what I just said, like the retrace, right? I have a $600 delta on it. So therefore, a retrace, a breakout upward of $600 actually shows a reprieve in the downward pressure and kind of a little bit of a safety net to buy a dip. That's when you would use your Fibonacci levels or whatever other levels you want. I don't know, GAN levels, whatever you have, you can use it as long as you're trying to trade. Whereas, you see the marketplace has made a low. Now, I am a contrarian trader, so I'm talking out of both sides of my mouth. I do like to buy weakness at times, and I like to sell strength at times. If the market is bearish, I will look to sell strength. If the market is bid or bullish, I'm going to look to buy the weakness in it. So, and I have different methods of doing that. But other than that, we won't go any further there. But anyway, as it stands right now, okay, if we look at Ethereum, it's squeezing up against resistance, okay? And Ethereum itself, we've seen this before. It hasn't even broken. I mean, it's in the discount area. We got the warning level of 3,535. We came down to 3,008. We're looking for the breakout above the 4,600 to actually show price discovery, targets of 10,000 and beyond. The rally won't be big. It's going to be huge, legendary. You only catch it, and you need steel chutzpah to survive it. Okay, so just get in our pro group, and we'll help guide you through it. All right. So Ethereum did it again. If we look at the RSI, okay, in Ethereum. RSI oversold, liquidity grab. Okay, every single time this combo printed, Ethereum reversed violently. Strong hands see the traps, weak hands see the fear. The script hasn't changed, neither has the outcome. Because if you remember, they tried to shake us out in June and it did not work. Okay? Legends bought 2100, price ripped vertical. Now September is running the same playbook. 3700 is the reload zone. Strong hands knows what comes next. This is not, a simulation. The script is identical. All right, so we got XRP that's down, that's down large. So the XRP army itself, they're having a little bit of difficulty here. Oop, let me connect right there. Main support XRP 261 needs right now to get over. What's the low right here? 269. Holy smokes! Needs to get over 282 or 280 itself to show some strength. It's actually drifting lower. A break of this low actually sends us down to that main support of 262. So it's a little tough right now for the XRP army. Solana is a real loser now, near 192, down over 90% last week. All coins remain under heavy pressure, hit harder than Bitcoin themselves. All right, so before we wrap up, crew, I want to make sure you're well aware of our free trading community. You click this link right there, you'll be taken over to our trading community, completely free to join. Hey, if you're interested in Forex, here's me, Park Avenue Trading. Now, I got a little bet going on, all right? I got a bet at the cigar shop that I can get 1,000 subscribers by the end of next month. I'm at 712. If some of you guys would just join, I don't care if you like Forex or not, just so I can win my box of cigars, it would be very, very nice. But anyway, you can come over here if you're interested in Forex. I'm also going to be starting a boot camp for market structure and how to read markets and all cool stuff. So you can get in on that if you like. All right. So if you want to, you can click this link right there. You can go to WeX, the broker of our choice, where we showcase all our trades. I can't get into WeX today. They're asking me to like do these puzzles, and I forget it. Like when you have to show me all the bicycles, people riding bicycles. Is that part of the bike or is that just people? I keep hitting and I keep getting it wrong, but I'll figure that out after this video. You want to copy our trades? You click this link, you'll be taken over to that site. Now look, we partnered up with BTCC. All right, another excellent broker, established exchange, now running a $500 US dollar giveaway for new users. If you're ready to step into our world of high performance trading, click the links below. Don't forget to click on over here and join my site. That would be very, very nice for you. All right, so we got the bullish side. Let's talk about it, because as we're into 32 minutes of this thing, we got spot ETFs like BlackRock's IBIT and Fidelity's FBTC now control over 150 billion of AUM, right? More than 6% of the total Bitcoin supply. This is a game changer compared to the past cycles. It's providing a strong structural bid. And cycle watchers are going to love this, all right? We are approaching, if we look at Bitcoin itself, we are approaching, hang on, let me get that chart. We are approaching the 1,064th day post-halving window. The point in prior cycles, 2016 and 2020, where Bitcoin went parabolic. So we just got to get through this ETF expiry. Okay. Now, based on the November 22nd bear market low, Bitcoin is due for a cycle peak sometime this coming month of October. So we got to be aware of that, because after past peaks, we had really deep drawdowns, and we'll guide you through it. But let's first get to the new cycle peak. All right, so that's what I got going on for you guys today. If you like what you see, make sure you like and subscribe. Don't forget, come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day, every day. Don't forget, join my little group. That would be nice for me to help me out, get my box of cigars. I can win my second bet. I lost the first bet. I bet the guy last August that I could get 5,000 subscribers by this August. I only had 168 subscribers when I started, so I didn't realize how difficult it was. Man, all right, so I rebet him again, double or nothing. I could get to 1,000. He said, "You're not getting to 1,000. Hopefully he doesn't watch this video and call the bet off. But anyway, so that's it for today's update. Massive liquidations, ETF inflows, cycle window that could make or break Q4. What do you guys think? Drop it in the comments. Is Bitcoin headed to under 100K first or gearing up for another leg higher above 111.6? And remember, what do you got to do? Y'all, you got to join our free community. What else you got to do? You got to trade with your head, not over it. Remember, I'm not a financial advisor. I'm just a trader, okay? And also, as you're a short-term trader, you got to enjoy the party, but dance near the door. Cheers.